Alright, I see something here I like on Target. I'm looking at Target's chart on the 4-hour, and I can see that a candle just closed above the 180-day moving average. You can see this green candle just closed above the 180. So now I believe it's going to push back up to the red moving average here, which is the EMA 15. So I think it's going to go up to the like 148 area. If I scroll over, you can see previously it was stuck underneath here, and then when it broke, this green candle right here closed above the 180 day, this little green candle my line's on. As soon as it closed there, it shot up tremendously, and then it eventually came right back down to the 180 day like a magnet, and now it's closing above it again. So I'm looking for another shoot back up to 148-ish, maybe 149-ish, around that area. If I go to daily, you can see we're just starting to build some support right here on the 50-day. Even though the candle's red, it's like stuck right here, so it looks like it doesn't want to drop below that range. And then on the 1-hour, you can see we've had a nice steady climb, and now we've got a candle, again, although red, closed right above this red line, which is the EMA 15, the 15-day moving average. So now it looks like it's about to continue to push up and at least go up to this 50-day here, so at least like the 149.50 area. So I'm seeing this thing pushing up, so I'm going to go over to options. I want to get a 16-day out contract, but I'm going to have to get so far out of the money because I could only get this one contract and it would be 152.50. So I don't know if I want to go that far out of the money. So instead, I might just sacrifice some time on the contract. What I like to do is take the time I think I'm going to be in the trade, which in this case is probably 3 days, and then times it by 4. So that gives me 12. So that's usually how I come up with my time, is I'm thinking I'm going to be in a trade for like 3 days tops. So I need 4 times that time on it. So I just go for 2 weeks. But if I take 2 days, like this could be a 2-day trade. 2 times 4 is 8. So if this only takes 2 days, I really only need 9 days on the contract. So I could do 9-day out, and then let's see what I can get. I could get the 150 for 120, and that'd be a 150 call. Let me look at the Greeks on that. Time decay is low. Delta looks good. And look at this, 3,796 people in the call, 2,483 in the put. So a lot more people are thinking this is going to go up than down. Just a couple strikes out at 155. There's just changed. I was gonna say just out of range right there at 155. There's a bunch more people in that call than put too. So it looks like a lot more people think this is gonna go up than down. All right, let me see. Yeah, I like this. I like this call, this 150 call with 9 days on it. So let me see if I can snag one of these bad boys for 120. Well, the mid price is 116. So let me see if I can get one for 116. Grab a call right here. I would like to get in for mid price if possible. All right, I'm watching my contract. Mid price is now 118, so I gotta hurry up and switch it to 118. There we go. Now I'm in. So now I'm in a target call. It's got 9 days on it. So that means 9 days till it expires. So I'm not worried about being 2%, $2 down right now because I have 9 days for this trade to work out. All right, I'm gonna add target onto the watch list, and then bam, I'm gonna go in and set my price alerts for take profit and stop loss. I want to do it on the 4-hour. I would say if it turns around and goes below this last green candle, if it drops just below this last green candle here, then that pretty much invalidates my trade because that kind of kills my theory of a green candle closing above the 180-day moving average and pushing it up to the 15 and possibly 50. So that's where I'd be invalidated since I'm making money as the price goes up because I'm in a call. If it goes down to here, I'll get out. And in the first place I'm looking to get out, or probably where I'll get out because I like to play a little conservative, a little more conservatively. So I'll probably get out here at the 15-day moving average. So if it comes up to 148.91 and smacks that, I'll be looking to get out. Obviously, I can make a judgment call and pull out before then if I want to, but this is just to give me some guidelines, This is how I want to set up the trade right now. So, yeah, I'm in a call expecting target to shoot back up to this range, 148.90s to the 15-day moving average. If it doesn't and it goes below this 145 point, that'll invalidate the trade. And so I'll look to pull out here for a loss, here for a profit, and I expect this thing to shoot up because it looks like it's now on the upwards move. So I'm looking for this to shoot up to this range, and we'll see what happens. All right, real quick, the moving average has changed. It was right here yesterday, which is what I was aiming for. Now the moving average is here, so I need to move this down to 148.28 because moving average has changed, and I'm only reaching for the moving average, not the random spot on the chart. So there, now I have it set to where the moving average is now. So that's my take profit. And then for the stop loss, I also want to tighten this too. I don't want it below this last green candle anymore. That was just to give the trade some wiggle room for it to work out. But now that it's already gone my way, there's no need to have a stop loss there anymore. So now it's going to be just below the green line, just below the 180-day moving average. So 146.47 is going to be the stop loss now. So I just updated the stop loss, which makes sense because it started to go in my direction. So no need to let it turn around and U-turn all the way back down to here. So I tightened the stop loss and I adjusted the take profit to the actual moving average, the 15-day moving average, because I didn't want a random spot. I wanted it to touch the moving average. So take profit and stop loss is adjusted. I'm up 20%, 23.50. Matter of fact, it's like almost at my take profit right now. It's like just about there. And I'm up a bunch, 20%, 24.50. So I'm just going to go ahead and pull it. There's no point to even sit in this any longer. Like, I'm just going to make a judgment call and pull. So let's see what I can get. I can get mid price is 140. So I can get out for 140. Let me try to get out for 140. Boom, filled. Okay, cool. So I just went ahead and took like 20% on the contract, $25 on the contract, just because I'm trying to reach this goal of 100 to 1,000 as quick as possible. So I'm trying to be a little more risk adverse, like not be as risky. Normally I would let this go all the way to the exact line, but I'm figuring I need to grab these gains while I can. I need to make sure I'm snagging these gains when I can because I'm really trying to hit this 1,000. So I'm trying to play extra conservatively. So I could have waited probably another 10, 15 minutes for it to touch the line, but I decided to just pull it and get my profit now. And that way I can go about my day and not have to worry about what's going on with this thing. I'm just done already for the day. It's a good feeling. So there we go. 20% on the contract, $25 on the contract. That's about 7%, $10 for the day. That puts me at 143 if you round. So it's good progress. I like this momentum.